Hey traders, Raghee here. And one of the questions that I'm getting is, now that we are in limbo waiting for the victor of the election, what is the market most likely going to do? And it's the same thing that we've talked about going into the election, which is I like the Dow to the long side and I like tech to the long side. So you have to find places that either are going to be victors, regardless of who the victor is. Think utilities, think transports. That's more of a Dow conversation. I would not include energies. I would not include healthcare. So who is sort of agnostic in this? Mostly infrastructure. I think infrastructure benefits either way, but there's no real infrastructure ETF. But when you look at a combination of transports and utilities, you've got a pretty good exposure to that narrative. And that's much more in sync with the Dow, whether you're going YM or DIA. All right, so that's an easy place to think mostly long. The other place is tech. Now, you may not want to go necessarily the NASDAQ quite yet. You may not want to get as broad as the overall index, but you can think about consumer discretionary and tech, meaning XLK. You can think a little bit more granular. You could even get more granular than that and look at things like Nike. Look at things like Starbucks. What are the relative outperformers in the XLY? What are the relative outperformers in the XLK? One of the trades we did in-house, it's called the trade of the week, was to look for a long position in CRM. So there's a lot of things that we can do a little bit more granular. Now, what do I mean by that? When we're in chop, which is what the overall markets are in and what most of the indices and the sectors that are heavily weighted within the indices, what we're in is mostly chop. And in a choppy environment, I don't want to bet on all the boats. I want to bet on specific boats within specific sectors. So I can look at specific boats within the SPY or ES futures. So one way I could do that is just pull up the SPY and look at what's heavily weighted within it and what might be, relatively speaking, outperforming. Again, I would avoid healthcare right now. I would avoid energy right now. I would actually be very cautious about financials except for BlackRock. And there's not a lot that I love in the ES, which is why I've kind of said, hey, go with the YM. That's my favorite. Or look perhaps at individual sectors that are sensitive to tech. Two of my favorites are to focus on the SMH and the CLOU. Again, where is the market not going to care who's in the White House for the next 4 years? Infrastructure, and I would focus on the Dow for that, utilities, IYT transports, semiconductors, SMH, CLOU, and the stocks within them. I've maintained a long position in Taiwan Semiconductor, in Qualcomm. These are places that are going to outperform even within a relatively speaking outperforming sector. So that's the way we want to think about this. Now, this is going to apply not only to my intraday trading, but it's going to apply to my end of day trading. So if you want to get a better idea of some of that watch list building that I'm really focused on right now, you can register for this Thursday's 8 p.m. webinar, simplertrading.com/learn. And I'm going to talk a little bit about what I've done this year in a very specific account with a very specific budgeting. One of the things I get a lot of questions about is, how much capital do I need to get a decent return? How much, and I use the word budget, how much do I need per trade? So the examples I'm going to talk about have a typical budget of approximately $2,400 per position. So I have multiple positions, but most of them average on the low end about $1,100, and on the high end, the average was 24, but between $1,100 and $3,000 was the range. Most of them ended up between $2,200 and $2,400. So that gives you an idea of what kind of capital you needed for these trades. And so we'll be talking about that on Thursday. All right, so I will see you all in the next update.